Traders, what are the first 5 things you need to get started with quantitative trading? That's what the question we're going to answer on this episode 17 of the Independent Quant podcast. I'm the host and founder of the Independent Quant, Luis. I am not a financial advisor. I'm a trader just like you. I make no guarantees of success or profitability. But with that, let's jump right on in. So what are the first 5 things you need? Get started in quantitative trading or systematic trading in general. There's so many different ways you can go. It's so convoluted. How can we break this down into an actionable path? Let's do that. So the first thing is we need a well-defined data-driven strategy. We need to remove ourselves from just watching the news or getting any random bits of information as valid trading material and actually develop a system that's going to be based on data. Now, one would think that it's very difficult to find trading strategies out there. Actually, not the case. You can Google algorithmic trading strategies, quantitative trading strategies, strategic or systematic trading strategies, and you'll have an entire host of sites pop up. The quality varies, of course, but finding a strategy that's data-driven is actually not that difficult. A great place, I believe, to start is theindependentquant.com. Obviously, I have a bias to that since I am the founder. But if you don't find yourselves with us, you can definitely find Investopedia. This podcast is not sponsored by any of the names that I'm going to mention in that at all. This is all run exclusively by the Independent Quant for the Independent Quant. But so Investopedia has no role in this. It is a site that I have used extensively for many years. Investopedia is really a commercial site. It has a name that lends itself to Wikipedia. It's not a wiki. It's a collection of articles and blogs written by what I believe are professionals. You can find a lot of really good information on a multitude of strategies. And that could be your seed for getting just strategies that are actually based on data and not you winging it by looking at the charts. To that, you can go to Stocks and Commodities. Their site is traders.com. I've been a subscriber to Stocks and Commodities magazine. It's the technical analysis of stocks and commodities is actually what the name of the magazine is. They've been around since the early 80s. Appears to be a really small outfit. The site isn't necessarily all that up to date, but the information that it provides is absolutely up to date. It's updated by active traders. Active traders write for stocks and commodities. Like I said, I've been subscribed to it for a number of years now. That's where a lot of my trade ideas come from. And those strategies are based on data. They're not, you completely just reading a chart. That said, it is the technical analysis of stocks and commodities. Like I said, this whole effort of mine, this independent quant, is my transition from being a technical analysis-based trader, which still uses data, still uses systems, and I have coded strategies based on technical analysis. It is still not usually considered a quantitative approach to trading because quantitative uses a lot of statistical analysis, a lot of modeling. Technical analysis does that to some extent. Sure, we do use indicators and all that. I mention all that because if you do decide to look at Stocks and Commodities magazine, their strategy usually code associated with some of the strategies in the magazine. So you can find strategies coded for NinjaTrader, Python, and a host of other brokerage, proprietary trading languages for different brokerages within stocks and commodities. So right after listening to this podcast, go ahead and start searching, what I said. Those 2 resources are what I'd recommend as a starting point, and find yourself a data-driven strategy for yourself. Step 2, now that you have determined a handful of trading strategies that you want to explore, now you want to find high-quality data. High-quality data is, there's a lot of use of, if you're using Python, to use Yahoo Finance to get their data. They provide a lot of free data. I'm not a fan. I am not a fan of all free data. If that's what you have and that's what you want to start with to explore, that's okay. I definitely don't have an objection to that. I'm not pushing people to spend money. What I've found with even something like Yahoo Finance, which I use Python to connect to it, is that you're using a library that gets updated by freelancers, right? By hobbyists. So the challenge you'll find is that it breaks down a lot, getting those connections, getting data from something like Yahoo Finance or some other free data sources. It can just be challenging. And I'll tell you my experience just in finance in general is if you're willing to pay for any type of education or data or information, that's where the real value is. That's where, I guess the secrets are being kept. Anything that's free, I highly caution you using because there usually isn't somebody that's incentivized to keep that free data clean and valuable to traders. So that doesn't mean it's useless. It just means that you as a trader now have to take responsibility and accountability for that data and scrub it, wrangle it, make sure that it meets the requirements that you have for it. And then and only then would I say that you're in a position to be able to use that data. For simpler strategies where you're not trying to pull a lot of different information, you're exclusively using market data, I recommend just going straight to your broker software. I mean, your broker software already has a data connection to it, already is pulling the market data to it, provided you don't need anything else. You're not trying to get social media sentiment analysis. You're not trying to, hit some news site and scrape some type of news article to then get a signal. As long as you're using purely the market data, and if you're just starting out, that's probably where you should be anyway. Just use your broker software. It already does all that heavy lifting for you. You don't have to necessarily worry about the quality of the data. You just have to worry about the ability to get that data stream neatly and efficiently to your software, meaning have a good data connection, a good internet connection. And that addresses just that big part of it. But if you, again, want to explore paid routes, there's Google that. You'll find a lot of different resources. I myself don't use any paid sources for data because I rely on my broker software to do that. So now you've got your strategy, you've got how you're going to get your data. Now it's time to start building out that data and hitting what is step 3, which is building a reliable backtesting and simulation environment. Again, we're going to focus on doing this with your broker software. It already has a lot of these tools built into it, specifically TradeStation and NinjaTrader. Not sponsored again. I started my trading career with TradeStation. That's what I was trained on. That's what the trading academy that I subscribed to taught us on. For yourself and trying to find building out a backtesting and simulation engine, if you're not advanced enough to build that out yourself, use your broker software. Within each of those two that I mentioned, TradeStation and NinjaTrader, they actually have an editor with them. An editor is a piece of the software that allows you to write and edit and debug your code. Like the independent quant's all about thinking that you're with the intent of building an algorithmic trade desk, as I am. So I'm assuming that you'll want to code your strategies. NinjaTrader has the added benefit that it is built on the .NET framework. So you're able to use something like VS Code or use Visual Studio in order to code out your strategies. Much more powerful debugging tools in those. The challenge with them is that they may not be able to see the C# library that is NinjaScript. But in any case, you can build those out within those tools and be able to do it all within the scope of your trading platform. The other half of that is now you've coded your strategy using your broker platform, you can backtest it right on the same platform, which is each one of the two tools I mentioned. Again, there are many more. Those are fairly large players in the brokerage business as it is anyway, so I suspect that many of you listening probably have accounts or are at least aware of who those companies are, but they are not the only ones out there. I would say that take a look at them. They more than likely have, especially if they have a proprietary programming language, they have an editor for you to use, and they'll have a backtesting tool that you can use. And they're tied. All you'd have to do is pull up the backtesting portion of their software, find the strategy that you coded and you want to run, and backtest, and perform a backtest on it. Once that backtest, you've manipulated and you optimize the strategy so that it's hitting the profitability you desire, and it's doing that within the risk parameters that you set out for that, then you're ready for the next part of this step, which is start putting that strategy into simulation, having to take live market data so that you can assess how does it perform, not just in the backtest, but actually in a realish environment, right? We're not to the stage yet where we're going to push this to trading a live account with real money, right? You have to backtest and you have to forward test and you have to validate before getting to that stage, right? Once you've done that, the next step now is you want to have a robust execution and automation system. Again, your broker software is probably your best bet to do this. It's just a flip of the switch and just place the trading strategy on using live data and live money, and you're off to execution. The one big piece here, though, is how are you going to perform that execution, right? You want to have your software running on something other than your home computer, right? And preferably in someplace in the cloud. So using something like a VPS, a virtual private server, is probably ideal. I did both when I first started trading algorithmically. I first started on my computer and learned that that was a horrible, horrible way to do that because you have to make sure that your computer doesn't fall asleep, that your computer remains connected to the internet, that none of the other software that you have running on your computer fires up and causes some type of interference or some type of lag in the trading software. Those are all real issues, and you just need to be able to mitigate those. There's now a lot more choices for you to be able to develop that execution strategy with is going either to a VPS. You can Google that. There are several ready-made VPSs. Research the one that makes the most sense for you because a lot of VPSs are with the mindset of running a Forex strategy. That's what I've found to be the most prominent, most prevalent out there. That only matters because of where the VPS is and how fast you need the connections to be. Just research a little bit on it. VPS. Another alternative to that, if you're comfortable with the cloud, I'm an AWS person. You can sign up and get a EC2 instance and have it run in that EC2 instance. That's a little bit more advanced only because you have to be aware of what AWS is, you have to be aware of what an EC2 is, and you have to know how to log in to all of that, install the software on the EC2 instance, and then put it to run. That sounds like an immense amount, but really it's rather simple to do that. The drawback is connecting to that EC2 instance may not be as simple as connecting to a VPS. It may not be as user-friendly because it assumes that you are more adept at doing all this. You're going to have to either rely on having your own computer run that or look into a VPS. Again, because the reason is you don't want any interference from any other software or a problem with your internet to cause a malfunction in your trading execution. It's fine if it's that you missed trades that could have made you a lot of money. It's absolutely horrible when it just fails to work to get you out of your trade and your risk management plan goes out the window. So that's step 4. Step 5 is risk management and performance monitoring, right? You want to have a framework to be able to do that. So you have now, let's say, that framework to deploy and trade your strategy. That's not the end all be all, right? I've been a manager my entire career, and just in management, I'm a retired Marine. The most important letter in BAMSIS, which is a management acronym, is the S, which means supervise. And that is true for us as algorithmic traders and quantitative traders and systematic traders, right? We place trades on or we put a system to run. It is now on us to be able to go and check that system to make sure it's operating properly, and then the strategies that are running on that system, that those strategies are operating properly. You want to make sure that the performance that you were expecting out of them, given from the backtest and the validation, is carrying over into the live trading market. You want to make sure that the market hasn't shifted on you, and now your strategy needs to be either optimized or completely stopped or redone in such a way that now it caters to whatever the market conditions are right now. So you need to incorporate that and have an intentionality with it. You need to make it a task on your to-do every day. I don't think any algorithm should be left without checking daily. I don't believe that a weekly check is that safe, depending on what you're doing. I can understand that maybe there are some scenarios out there, and it's probably all me as to how I approach things. But definitely if you're getting started, get in there and check it every single day. Condition yourself. If anything, it'll get you that much better, get you more repetitions into looking at the statistical performance of your trading strategies, looking at the profitability, just going through the process of just touching all the different components of the system that you've created. All of that has an immense amount of value. So monitoring everything that is happening is crucial. If you need more details than that, head on over to theindependentquant.com. We've got multiple resources for you able to get into this wonderful world of trading. So if that's what you see for yourself, whatever that may be, as whatever your goals may be, we've got something for you at the Independent Quant. So sign up for our newsletter, check out our courses, and until then, I'll see you at our next episode. Keep it green, everyone. This is Luis, out.